In this video, I want to explain a scalping rule that I use, a trick, technique that helps me make more profits, and it also helps me avoid taking losing trades that could be really large ones, but using this technique, they turn into really small ones. I'm going to show you some winning trades, and I'm also going to show you some losing trades to back up this scenario. Now, I want to say I don't have solid rules for this, but I'm going to show you examples of how discretionary it is. Some might agree with it, some might not agree with it, and in some cases I feel the same way, but it is a per trade basis. Before we get into it, if you're watching this video and you have not already followed me on my Instagram, at InvestaTrade, the link will be in the description below. I recommend following me on here. I post daily trading recaps, I post levels that I'm watching, and just overall trading tips and tricks that I guarantee you're not going to find anywhere else. The link is in the description below. You're missing out if you're not following it. So to gain context on what I'm going to explain, because it's going to come together like a puzzle piece, let's go over the pre-market plan on Thursday, May 11th on the S&P 500. It was a very simple plan that if we can open below or trade below 4142, which is this red line right here, I want to play the market short targeting 4130, 4122, which is the green box below this. Now, before I get into the example, I want to say a couple things. I would say 95% of my trades when I am scalping, and specifically scalping only, I am riding momentum, I am capturing the momentum, and I'm capitalizing on participation and volume in the market. 90 to 95% of my trades usually work out. I'm not going to call it right away, but I'm not going to call it too far away from when I entered. There's not much drawdown, meaning it doesn't go red on me for too long or a lot amount of money. And also, after I'm in a trade, there's not much opposing volume for that setup. For example, let's just say I'm short below that level. If I start to see buyers come in after I'm short, then my position really isn't favorable, and it's not going to work out 90-95% of the time in my favor directly after entering. As I mentioned earlier in this video, it's very relatable to scalping, even back in the pit trading days or an open outcry type of system when charts weren't even needed. With this in mind, my trade on the S&P 500 was a $6,200 win, and I took the E-mini S&P 500 future short in the first minute of the open. Now, I normally don't like playing the open. However, according to my plan and according to the levels that I was watching, if we can open below or trade below 4142, I want to play the market short, targeting the demand zone lower. Now, if we were to look back at the tape, what I'm going to do is replay this for you, and I want everybody to see after I've entered this position right here at 9:30, we see the aggressive selling come in. I never hesitate. When I see volume in the direction that I am looking to trade, I enter the market and I manage my risk. What I said earlier, about 90% of my trades usually work out right in my favor. They're not going to always move directly straight down or straight up, but my drawdown is very limited and I don't have opposing volume in that direction. Meaning if I just saw a bid, let's just say step in for 500 lots, that is opposing volume in the direction that I'm looking to trade because I am short. So as I'm in this short position, keep an eye on how heavy the volume was to the sell side. We see aggressive selling step into the market. We slowly come down into my 4130 target, and I'm short at 4140. This is down 10 points from my entry pretty much immediately after I entered. Granted, this did happen at the open, but the market moved in my favor and the drawdown from when I entered was very limited. In fact, I was never red on this position and my running P&L was always green. This is how I know I'm going to take a very good trade. I scale some at my target at 4130 and I hold runners to maximize my gains to a further target. Now here's another trade. It was a 1-point loss or a $500 loss. Now this is what the point of this video is I see a lot of traders, A, have very large losses, and B, they don't know when to get rid of a losing position before it becomes dead. Now on May 12th, which is Friday, the day I'm recording this video, in the intraday commentary tab, this is where I update my thoughts throughout the day. What I was watching for was the market to hold not only VWAP, but we were spotting buying on the tape, and I wanted the market to break out above 4158, 4159. If we can get that, I would target the supply zone above. Well, the same minute, I took the market long. I said I'm taking a stab long, 4157, targeting the supply zone above. And then 3 minutes later, I exited that trade for a 1 point loss. I said I don't like my entry. I may have mistimed it, and I might possibly look to re-enter. I'd rather take a 1 point loss than hold on to a trade which I do not like my entry. I can always re-enter the setup. Now what the tape looks like is you're going to see a large amount of green come in past the high, yet the market could not move up. At this moment at 9:43, I am in long right now. So imagine yourself in a long position, and what's going to happen here is the market really did not like this breakout. There was a lack of volume on the breakout. And since my entry was essentially near the high of day, 14 minutes into the market being open, not that much time. However, since it was at the high, I really wasn't favoring my entry. For example, let's just say I had an entry at the low at 4153. Well, maybe I would give the trade a little more room to breathe, but I guess it really depends on my entry, how it was at the high, that I did not like this breakout to the upside. So we're going to see this breakout. It immediately pushes up. Let's fast forward this a little more. Boom, green comes through, right? And immediately it fails. And we start moving down, and I see selling come into the market. Now, remember what I said earlier about I don't like taking heat right away, or I don't like a major drawdown? That's not to say that a trade doesn't have red on me or I don't have any drawdown. You must give the trade room to breathe. However, the point of this video is a lot of people marry a position, meaning they love it so much, they think it's going to go up, they think it's going to go down, and they hold on to a position where they entered, because where I entered here, I perceived it to be a very high quality setup that we were going to break out. However, the information after my entry makes the probability of my original thesis less likely to work out. With this in mind, and the selling pressure that we see come into the market, I'm reacting to new information that the market is presenting me. The market is a storyteller, and 1 minute it's going to tell you a new chapter that we didn't even open up a few minutes before that. So it's constantly giving us information, and our job as a trader, especially if you are scalping short term, is to read this information and be flexible to go with the flows of the market. So I saw this high a day breakout. I did not have a really good entry because of this. Then the selling started to increase, and let's replay this, because once we break this pivot low right here at 4155, an offer actually just bleeped right there. We see the selling start to come in even more. Right there, I stop out of my position and I take a 1 point loss. To me, this position was dead. Was it a big drawdown? No, because it was a $500 loss. But new information got developed that told me that my original entry was less likely to occur the way that I wanted it to happen, and that was to move up. If the market kept moving higher with increasing buying volume, and let's just say bids stepped in and maybe the offers thinned out, then I would have held on to this position and I wouldn't have got out. It's a fine line of following your plan versus bending and flexing to new information. And a lot of new traders, again, this comes with screen time and experience. You have to experiment with it and figure out what works for you the best. For me, this has been working out very well. It helps me keep my losses small. As you can see, a $500 loss is nothing to a $6,000 win. And this was a really good move because directly after I stopped out at these highs right here, the market dumped. And if I had my original stop loss at 4151, I would have taken a bigger hit, about a $2,500 hit versus a $500 hit, just reacting to that new information. Now, a lot of new traders cannot do this. I did not like my entry. I did not like the volume. I felt like I rushed into that setup. There wasn't enough development. There wasn't enough information. So I took it off for a point loss. I got rid of a poor position before it came dead. Too many traders hold on to poor positions which are past being dead. For example, a lot of traders who are struggling would, let's just say, get in the same entry as I did, right? They would have the market come down, but let's just say their stop loss is, I don't know, at 4144 all the way down here. At this point, if you're holding a long position to your stop loss at 4144, I would say the chances of the market coming back and breaking the high where your original thesis would have worked out is very, very slim and the probabilities of it happening very, very low. And this protected me from a really large sell-off just by reacting to this new information. So here's an example of another trade that I took. It was a $5,700 profit. It was about a 2-to-1 risk to reward. The scenario for this trade was very, very simple. At 10:41, I sent an update saying I'm watching a rally into 4142 to 4150, that same level from the day prior, to play the market short, targeting 4130, 4122, the same exact level from yesterday as well. Essentially, the market gets that rally right into 4142. We fail at this level and we sell off into demand. Now, what the tape looks like is very simple. Remember what I said about volume moving into my direction. So I'm going to play this replay and I'm not in yet. I got in at 11:12 Eastern time. However, a very important thing to note here is we get that rally into 4142, an offer steps up, and aggressive selling starts to come into the market. Now I'm going to replay this and watch how this offer just got filled. Heavy aggressive selling comes in, and now I take the market short with the stop loss above the high, recognizing this heavy selling pressure. Now I'm in short. Remember what I said earlier. A lot of my scalps work out right away. There's not much drawdown, and we usually come into my target very fast. Sell off, continuation right into 4130, 4129. I scale out my position here, and that move hit my target in about 4 minutes. When I'm scalping, I am scalping very quick momentum moves, and I want to time the market correctly. And with this, you can now hold runners, especially if you scale out, that you can't expect the market to move straight down in your favor right away. You can't expect it to move straight up and go up forever or down forever right after you enter. There's going to be consolidation phases. There's going to be short-term bounces. There's going to be sell-offs. There's going to be some roadblocks that we must go around. However, if you manage that trade correctly, you respect your risk, that's how you can capitalize on holding runners, because this thing kept selling off, and this is how I was able to capitalize on those runners. And as I said earlier, my running P&L never was red on this setup. As you can see, there were drawdowns. You know, at one point I was up 2,800, and then it went down to 1,500. Then it went all the way up to about 6,200 and fell down to 4,000. So there's going to be drawdowns. There's going to be pullbacks. Don't expect it to be straight up. However, manage the trade accordingly. And if it's a dead position that, let's just say I got short at 4142 and this thing kept going up, well, if my stop loss was, let's just say, or up here, I could have got out of this position if we moved up over maybe past this high, right? Or if there was a large amount of buying coming into the market that proved my original entry to be less likely to occur. I'm repeating the same things over and over because the patterns repeat on a daily basis in the market. And a lot of traders are averaging down their positions, they're adding to losing trades, or they're not cutting it when they need to be cutting it. Experiment it yourself. Test it out. Don't go with full position size and try it out, because for some people it's going to work well, and for some people it's not going to work so well with. It depends on how you trade and your personality. I can only go over what works for me the best and how I perceive the market. So this was a scenario back on the 11th, the same levels, demand and support. We were watching it for it to hold. We were spotting buying on the tape, and I said that this entry was a little too early. The market began to move higher right here. And this is when I entered the market long. Now, everything that I've explained in this video, this is a scenario where it did not work out in my favor. I took the market long right here. The next 5-minute candle, we started moving lower. Keep in mind, my stop loss was below low a day, 4121. I got in around 4130. It was about a 9-point risk or a 9-point stop loss. Well, the following 5-minute candle was a red one. We started moving lower. There was aggressive selling that came into the market, and I stopped out of this position for a very small loss. Now, if I held and I kept my original plan with my original stop loss, I still would have been in this trade, and I would have been able to capitalize on a nice rally up into our 4142 level. So some people are going to be watching this and saying, Carmine, I thought you only stop out when your stop loss triggers or when your plan occurs. Now, that's correct for certain trades, certain conditions, certain context, and certain scenarios. However, when I'm scalping very quick momentum moves based off of the tape, I prefer to flex my plan and go with new information that gets developed that we didn't have prior to me entering that setup. So this is a perfect example of how I stopped out of this trade, although my analysis was incorrect. But using this technique, it bit me in the ass and it didn't work out, although my analysis was correct, and I would have made money on this if I followed my original plan. So I'm going to end it on that note. I hope this video helped. If it did, drop a like, comment any questions, and definitely check out the links in the description below. I'm ending it. Peace out.